Greetings, this is Dr. Jeffrey Scott, and this is my Market MRI Pro weekend market update. I have a crappy mic. I apologize. I did bring a headset, and I can't get it to work with this computer. So I'll just use the internal on the a little Razer 14-incher that I'm using here. We got the rate cut we expected. Now comes the PCE, multiple Fed speakers. It'll be interesting to see what their tone is. Are they going to try and talk back the market rally? Are they going to be a little bit more hawkish than Powell? All those things are something to consider. And as I mentioned during the week, if we see weakness in September, it's usually worse the second half. We also talked about rate cuts occurring near all-time highs and how typically the market's higher a year later, which is great, but the first couple of months can be rocky. As always, this is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You'll are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report, and trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. I continue to get a lot of emails asking me about performance and why I don't show performance every week. I did show it back in July, and I showed that I doubled a $150,000 account in the first 6 months of the year. I decided today, in the spirit of getting people excited to come to the live meeting and what you'll learn, to actually show you what's happened since then. It is extraordinary. It is because we market bottomed, and the time you make money is off of bottoms. Take everything you see with a grain of salt when I talk about my performance. I can tell you that I only have one active trading account. The rest is long-term money. I treat the long-term money differently. There, it's more about um, it's about what's the word I'm trying to think of? It's maintaining my nest egg. It's about managing it to avoid losses and to capture market size gains. And if I can beat the market, that's great. But in my trading account, I want it to be a big wow. And I think you're going to be wowed. If you're looking for the wealth charts video, look for it Monday morning at stocksanddocs.com, where I will do something late night on Sunday because I've got an early morning flight out of California back home. My Google group is called Top Down Trader. How do you join it? Just go to Google Groups, click all groups, find Top Down Trader. Let me know how you'd be contacted. Why would you join? You get a $100 discount on my tools. You get invited to some member-only free education programs. And it's how I send out notification that I post a video. I've been posting most things on YouTube of late because I want to drum up business for the live meeting. Palm Beach Gardens meeting, October 26th and 27th. It's at the Marriott Palm Beach Gardens. This Palm Beach Gardens is 15 minutes north of PBI Airport. We'll have 2 packed days of education and software instruction. There is a separate meeting. My meeting is Sunday and Monday. There's a meeting Friday and Saturday with John Person. I'll be speaking at a meeting in New York for in the healthcare world on Friday, but I'll be at his meeting on Saturday. I always learn when I listen to him. There is a separate fee, but one airfare, 2 meetings, spread out the cost of that airfare. My meeting is $12.50. You get breakfast and lunch on Sunday and Monday, and we'll do a dinner cruise on my yacht, Stocks and Docks, on Sunday Eve. Hotel is $155 a night. When you sign up, I'll send you a note about the code, and I'll also mention there's a nicer hotel because it's on the beach if you want to spend some extra time or you bring family. So if you're interested, just email me at marketmripro@gmail.com and I'll get you what you need. So, performance. What will I teach you in Florida? Here we talk about stocks. We talk about some general ideas I have where I think the market is going. I got a pretty good record of stock picking. If I say so myself, just go back and watch the videos. But I have a process, and I want to teach you that process. I want to set the foundation by showing you the tools from the masters that I've learned over 30 years of trading. Ian Woodward is my primary mentor. His was William O'Neill. So a heavy can slim background, but my way of doing things. It's a top-down approach. So we'll talk about how do you tell whether the market's going up or down, when to be long, short, or out. how to identify the best sector and industry groups, and tools and techniques to find the best stocks at the best time. Then the key is how to use options to multiply your performance. My performance was triple digits. So far, we're only 9 months in, and we're not 9 complete months. It's hard to get that with a modest size account trading stocks. Options can accelerate and multiply your performance. I have a series of trades that I take. They're not sexy, but they are low risk, high reward trades. So I know my downside every time I go in. And then I use money management skills, where and when to buy, what to buy, how much to buy, where are my stops and targets, all things you got to know before you take a trade. Then special sauce like seasonality and more. And then many people have my tools, but you all have your own tools. And I use most tools in the market, and we can talk about how to master the tools to find the great stocks. So these are snapshots from the Charles Schwab website that I'll show you in a minute. But I wanted to start with um, why do I trade top down? Now, when you look at this, in a strong market, it says you could get 106% gain in the first 20 days or 1 month. Well, that's real. That was a bunch of smart people who met monthly at the Palos Verdes Estates Library in lovely Palos Verdes, California. Ian Woodward was in the front of the room. The smart people picked stocks, and then somebody measured performance. And then retrospectively, they would talk about a strong market, mixed strong, mixed weak, and weak market. So you would define the market independent of the stocks. And then retrospectively, you look at the performance. The message is pretty clear. In strong markets, the wind is at your back. You attack because you can make a lot of money in a short period of time. In weak markets, the same good stock pickers, not so much. The other message I see, if you get a lot of profits, take some off because typically there's a reversion to the mean. The only thing that didn't revert to the mean was when you're in a bear market and you're down that severely weak market, go to cash because things are just going to get worse. Now, I started the year with a model trading account of 150,000. I have a lot of digits in my net worth, and I'll be honest, I am 68. My wife is wonderful and brilliant and beautiful, but she doesn't know how to manage money as far as investing. She knows how to manage the household extremely well. So, being 68 and being a cancer doctor, where I saw young people, much younger than me, healthy one day and not the next, I have the majority of my money is managed by one of several money managers with fiduciary responsibility. I trade typically an 7 figure account on my own. But because I've been so busy at work, I decided this year to pull it back to 150,000. That's what I started the year with. I trade 80% options, and I've ridden several leaders by rolling up and out. Probably my biggest winner this year has been Hood. I have used Market MRI Pro to find the best stocks in the best industries. And in July, I showed you the brokerage account with a double of the account in the first half of the year. I also mentioned that I rewarded my performance by adding 500,000 into that account because if I'm doing so well, I might as well trade more money. I'm going to show you what happened next. One of the critical things that happened in 25 on April 7th or 8th, the market bottomed. And it's coming off of bottoms into new, fresh bulls. You don't even know it's a bull when it starts, that the most money is made. Have I done triple digits every year? No. If I did, I would be working for Warren Buffett. That's not going to happen. But have I been able to do it multiple times in my career? I have. And when are the best times? March of 2009, March of 2020, periods of time where we had a massive bottom and you got this amazing opportunity where throwing darts, picking stocks, you made money. I think I did pretty well. I'd like to finish the year up a little bit further. So this was my account, all right? This is the account that I trade. There's an IRA that I pretty much treat as long-term money, although I probably should be trading it because of the tax deferment. But I end up trading this account. It shows you the performance from January 1st, 2025 to September 19th. The beginning value of the account, as you could see, was pennies under 150,000. As I mentioned, in July, I added another $500,000. The the account is up since the beginning of the year, and that means about 2 months of working with that additional money is up 549,000, and the ending value is 1.2 million. Therefore, since beginning of January, I've had a cumulative rate of return of 188.16%. That is combining both the initial money and the investment and the timing. I'm not sure how they come up with it. If this wasn't a slide, I could click on it. Now, if you look at my account, I'll tell you exactly what happened. I had a great start of the year, and then I got sloppy as the market sold off, and the market bottomed right in this area. And April 7th, I put out a video that said a bottom is in. And I went long, and I told you exactly what I bought. Two worked really well. I went big on Hood, and I went big on Palantir. That's another big winner on the year. The third one was PAGS, and it just didn't work out as well. Up, but not like the others. And then you could see from the point of the market reversal, just a steady uptrend. And then I think this feels almost like a blow off top that we're having now. Now, what's crazy is if you look at that market bottom, and I think that was a Tuesday or a Wednesday that I called it, and you look at the market from the time that I thought we bottomed until Friday close, up 389.16%. I mean, hello, that's a pretty crazy return. Remember this slide? You're probably thinking, sure, up 100% in a month. Well, it happens. But it happens when you come out of a bear or a tough market and the wind is at your back. I mean, it makes us look like we're brilliant. So, up 389% since the market bottom, up 611K since the market bottom. Just goes to show you that I was down 50,000, 60,000 at the time the market bottomed. So it's the market as much as anything else. Now, can I pick stocks? Yes. But I think it's a combination market big, picking the right stocks and the right trades. Now, the disclaimer, past performance doesn't always predict the future. Results are my main trading account alone and don't reflect performance in my longer-term managed and unmanaged accounts. Trading options is still risky and should not be done without adequate education. And trading performance is much more than just stock picking. That's why you come to the live meeting. Why do I worry about a recession? Well, the only time the market sold off when the Fed was cutting rates in the setting of all-time highs was when we were going into a recession. If we go into a recession, I will raise cash and I will approach the market very differently than I do in a bull market. When this is the 10 minus 3 month and the 10 minus 2 year yield curves. When it dips below the black line, the zero line is when they call it an inversion. When it crosses back over that black line, you see the gray bars. Those gray bars represent the recession. Notice every time it reverted or inverted and then came back up, ultimately there was a recession. Now, it doesn't always happen immediately, and this one's taking forever, so maybe this is the time we don't get one. But based upon history back to the 80s, we are due a recession. Now, one thing that we'll see is during time of recessions, you get monetary tightness. And we had some sneaking up on us earlier this year when the market sold off, but we don't have that now. And then the other thing is, I think this was a big surprise to the upside of the Philadelphia Reserve District 3 General Activity Diffusion Index came out very positive, and recessions usually occur when you're minus 20 or below. So, no, there's no recession tomorrow. I think 2026, I think all bets are off. I bet we get one. It wouldn't be unusual, but recessions are bad. And when you get one, it impacts on the market. Know your news and earnings. I think this, I left on this week's and not the one I wanted to. All right, I'm going to pause this for a second and fix that. Of course, I just realized since it's in Snagit and I'm using Snagit to record, I can't pull it out. So I'll just go to Market Watch. You could see all these Fed heads are speaking. 5 on Monday, 3 on Tuesday, including Chair Powell, 1 on Wednesday, 6 on Thursday, and 2 on Friday. I just wonder if they're going to try and talk down the rate cuts. And the other big thing out there is there's still quantitative tightening, and that kind of mitigates some of the benefit. They're selling off some of their balance sheet, their debt. The big news I really think, besides all the Fed head speaking, is the whole PCE complex, which comes in on Friday, and then we've got some jobless claims and a third estimate of the GDP. That's probably not a big deal. I think we're probably close there. So there's some news that's coming in this week, and then earnings whispers tells me it's a light week on earnings. Um, However, you got Costco, great asset. I've always thought overpriced. You got KB Homes. I owned Lennar going into earnings. It did not do well, but I had, as I've talked before, had some puts. I put a put spread on to protect my profits, and I ended up closing up out the positions with a gain. But I would have had more gain if it went up. But c'est la vie, you can't win them all. It's about not losing your nest egg. If you come to Florida and you're bringing a loved one that you want them to love you back, there is a Marriott Singer Island that is 10 minutes away from where our meeting is. It's on the beach. I used to live 2 or 3 doors down. We've had meetings there. They're just expensive. But it's a great place to bring your family to. So something to think about. So let's go and take a look at the charts. That went long. Again, I don't know if I'll show my performance again until the end of the year. But if I'm telling you what I'm doing and I think this is good and this is bad, it's probably important that you see that I actually do make money in the market and I actually do trade real money. All right. And that you don't have to have $10 million in your account, since I started with 150,000 in that account. If we look at the markets on Friday, the Qs were up 0.68, leading spiders were up 0.22, diamonds 0.06, Russell was down 0.78. It was a mixed day. In fact, most of the stocks were down. If we look at the new high, new lows, still remarkably positive, but have come down considerably, both less than 100. But this is the kicker right here. Only 25% of the S&P 1500 were up, 35% of the NASDAQ were up, and 30% of the NYSE were up. Right there, nothing else said. That is a major divergence and something that some people, myself included, might find a little bit concerning. If we look here at the S&P 500 sectors, um, technology led up 1%, utilities 0.64, communications 0.41, discretionary 0.38. It's like this is what we had this whole run up was tech and discretionary and communications. If we look at themes, uranium, every time somebody talks about a data center need, there's so many things that move. Vert as a cooling company, the uranium companies, some of the electrical generation utilities, the electrical component manufacturers. And Friday was a day that they talked about data centers. And after hours, Meta talked about a big contract opportunity with Oracle. Global uranium, gold miners, silver. Gold and silver are clear cut the big winners on this weekend. And then you can see a big drop to the tech names, clean tech, then copper, tech software, metals, mining, solar, transports, artificial intelligence, and then cybersecurity, and the numbers come down. This low participation rate bothers me, and I think it shows that we may be at all-time highs, but typically you get an all-time high before the market sells off, and then it's how long does it take to get back there. So how much higher we go, I don't know, but I am, thinking that we're probably much closer to a top than we are a bottom. And I hate being a bear, and I won't go bearish until my signals tell me to. Speaking of my signals, my timing model on the daily charts, just look at the green or red below. We are in bulls on the daily. We'll see how long it takes to load it, but we are bulls on the weekly. I'm in a hotel, so the internet sucks. And yes, sucks is medical speak for really slow internet. You can see the weeklies, you can see the power of these markets. All these touched or at all-time highs. The Russell took out all-time highs, but came back for the close. Weeklies and monthlies are in buys. If we look at the U.S. index ETFs, just blow them up and talk about them. Beautiful uptrend. Little pullbacks are normal. This was a minimal one. All-time high set during the day on Friday. We closed off the all-time highs. This is a daily chart. This is the 50, and it's at 640-ish. And we closed at 663. It's about 4% away. How unusual would it be to see a 4% pullback? So I like to think of the high, low, and the medium scenario. The high scenarios, we just keep going on this line until we stop. And somewhere there are probably some lines that could be drawn that would be a channel that we are in. And we are clearly closer to the top than the bottom. Do we come back to this channel? We might, but we're in a major bull. High road is we ride up the upper part of this channel. Middle road is we probably go sideways. And the low road is we pull back and don't bounce, but pull back and touch the 50 and bounce. So, and the 50 is getting close, so that I have to look at the market that way. And right now my signals say be long and we're going higher. I'll show you kinks in that armor as we go further tonight. The Qs will look a lot like the spiders. And again, we could probably do a channel, and we're probably near the top of that channel, but we were going up this way, and now we're going up much steeper. Is this the beginning of a climax run? Those can be fun, but they don't end well. Again, the same story. It's got the 17 and the 50. The 50 is at 570-ish. We're at 607, 5% away. Again, major support, not that far away. That's a good thing, because if we do get a sell-off, it'll give us another chance to buy cheaper, but don't think we have a major sell-off, just a small 5% correction. Diamonds, straight line up. All of these, I didn't talk about this line, but this is projected seasonality, and all three of these have negative seasonality. The Russell, the good news is the Russell finally set another all-time high. The bad news is it opened up higher and traded lower on Friday, which could be a reversal. It's a red candle high. But again, we'll see what happens. Bad seasonality. It's got the 17 and the 50 right underneath 227 to about 242. So it's 6 or 7% pullback. So all of these are probably at risk of coming to their 50. But you got to trade the market you have, not the one that you think you're going to get. And right now, the market says you should be long. If we look at the VIX, it's off the lows, and it was actually down a little bit on Friday. And if we look at the dollar, this is one of the things that I'll be watching that could burst our bubble. It broke up out above the 50. Now, it's kind of getting into an area that has been resistance, and we'll see if it can break above that. But a strong dollar, I think Larry Kudlow used to be a big proponent of a strong dollar. It's good for those of us that are buying things from overseas. And I was just in Barcelona, and boy, were things expensive in dollar denominations. But it's not always good for the U.S. stocks, especially conglomerates that are selling that are importing things into this country. Um, and a strong dollar is also makes things more expensive over there as well. But our dollar has been extremely weak. You could see gold, big rally. Now, it wasn't long ago when I said that is an important line and that I was buying gold if we broke above it. And I bought GLD. I have a big position in EGO, and I'm looking at entering a position in Kinross on Monday, KGC. Gold has been incredibly strong until it's not anymore. Silver, the same thing. Gold and silver are doing great. Oil is struggling on the 200. Natural gas can't break above the 50. And if I was concerned about the dollar, I'm also concerned about the rates. This is the 10-year. Yes, we are way down from where we were, but it looks like we're bouncing. And the question is, can we get above the 50? And so this one, the 10-year was up a little bit on Friday, 0.8%. And then the 30-year down here was also up, and it was up, get it here, 0.74%. We're still well below the 5%, which is where we get into trouble, but I'll be watching the rates and the dollars. Buckets, if anything, we got weaker on Friday with the poor breath. We've got more stocks building up below the Bollinger Bands, but no signal. Market breadth, this is the NYSE, just off the all-time closing high. The NASDAQ composite, new closing high. Volume looks big, but keep in mind it was an options expiration date, so no surprise on the volume. Notice all-time highs in the stocks above the 20, 15, 200. Both of them dropped. All-time highs, the AD lines were negative on both of them. The up-down volume was negative on the NYSE. There is a lot of weakness underneath. If we look at the new high, new low number, this is one of my favorite signals, but only at extensions. 0.57 on the spider, 0.75 on the NASDAQ composite. S&P 1500 is 0.62, and it's come down to 0.82 on the Russell. There is something wrong when the market's at our all-time highs and these things are lagging. You can look at the AD lines and all of them, and they're lower than they were before the all-time highs. So a lot of reasons to be concerned, but this could go on much longer than anybody expects. So how will I know when things change? Because my daily timing brief will change extremely quickly. And when I start to see I'm losing the dailies, I start to do things by raising cash. And when we start to lose the weekly, I start looking at bigger things, whether I'm shorting the market, shorting individual stocks, or just going all to cash. So my thoughts on the market is I think we're getting close to a top. I don't know when that will happen. Sometimes you get a parabolic run as you go into the top. Kind of looks like we're in one on the Qs and maybe the Russell. I enjoy it until it doesn't work anymore. Stops are necessary on your positions. Raising cash and trimming as we go up and trailing your stops higher always makes sense. But I now enjoy the ride. Not going to last forever. If we look at the ratio charts, you can just see the things that have been leading over a period of time. And on the short term, you can see it's all about communications, technology, and discretionary. And that's where the movement is. So that takes me to the JAS layout. And if you're a top-down investor, and hopefully I convinced you why it makes sense, I'll do the short-term momentum and rank top three are utility, technology, and communications. Now, utilities are interesting because a lot of them have to do with those data centers. If we do the same 2-day momentum and take the top ones, computer hardware, independent power, regulated electric, renewable, software, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So top down, top three sectors, top 10 industry groups from those three sectors, 602 stocks. Very quickly, let me go in here and let me filter them for $5 and 500,000. Hit OK, rank them by 2-day momentum. And we can just take a look at some of these. APP, wow. Talk about climax run. Know how much more, I don't know about buying it up here. I do know that the fundamentals are amazing. Look at this earnings per share growth. One thing they talked about at the meeting I'm at in Vegas, the VectorVest meeting, is the most important things is the earnings. And boy, APP has had earnings on this run. It's multiple 69. It's growing at 153. We're going to get 234 versus $1.25 with any beat, and they surprise upside every time. It'll be another 100% grower. So APP, maybe it goes higher. It's getting extended, so the risk is there. This is one that I introduced you to quite some time ago that I've been playing. This is OKLO, and it's got something to do with uranium and the power companies, the nuclear companies. No brainer energy nuclear stocks to buy with $100 right worth of. And this was one. Um, it's hard to buy it up here. Why don't we have a high jump? Because it's an IPO and it hasn't been around long enough to make the signal. AGMH, I don't know what this company does, so we can get the news. Stock price rally on 6K filing is largely overdone in warrant selling. MetaGuest AI, financing facility. So, Federal Agricultural Mortgage stock. Probably not interested, and especially when it had a big gap up like this. CrowdStrike. This is a leader. Um, Major pullback. It's broken here above the 50. It's got good seasonality. On Thursday, it had gap volume breakout momentum. Look at relative strength and OBV coming up. Earnings per share growth slowed down. We're going to get 90 cents versus 93 cents next time. Certainly as a leader in the market, has been doing well. ASML is a very expensive semiconductor. I've got some of this in my long-term money. It's not something I typically trade at in the neighborhood of $1,000 a share. Big gap up and consolidating there. SNPS, Synoptic, I believe this was, is this a bank? Having problem with me, or is it, I guess it's a semis. Having trouble with a major customer. That's not good with legal lawsuits all over the place. Was a leader, looked really good here. I mean, I love flags, but you got to break above it. It broke below it. And I guess the thing to remember is there's no guarantee that it's not going to break down. All right. Clack, another expensive semiconductor, nice big gap up here, holding it into it. Big pullback to the 200. The triangles are John Person buy signals. I added them in. They're not part of the standard package. Big move up off the 200. Still got to clear the 50. I'm not seeing a lot of things I love here, so let me skip around. Dave is one that I've been in and out of. I think it's time to be in again after a big run up and sideways move. It looks like it's breaking out again. Netflix was another one that I think is just ready to go after a nice little consolidation. It's one of my favorite stocks to talk about during the year. And I'm not going to talk much seasonality today, but when you see this spike here, that's a seasonality related spike. And that's, there are periods of time. Here's another time. Here's another time where it's really good to be buying Netflix. And so that's one of the things we'll talk about is how I incorporate seasonality into my trading. So that's from a top-down perspective. SMR is another one that looked good, a flag and a breakout. I love breakouts from flags. Yeah, it's kind of a sloppy flag, but it's still a flag and a nice breakout on big volume breakout momentum. And notice these two dots in a row above those are my momentum dots. And my favorite scan is a double momentum buy signal, and that one has it. So that's how part one way I do the top down side. Another way is I could have not started with sectors, but rather, come on, clear everything. Just ranked the industry groups and took the first 10 industry groups. Uranium has been super strong. I've been playing one of the cheaper ones, which isn't always, oh, I hit life insurance, always the best way. I've been playing Lu, rather U. The leader is CCJ. CCJ looks like it's ready to run. And how many of you are still holding Lu, which I gave you back a while ago? It's hard to hold this thing. It had a major pullback. I'm out of it. I had my fill of it when it couldn't hold the gap up, and this thing is over $300 now. Holy Toledo, we're at $300. If we go out of the top-down view, we'll just kill this, and we just go back to the JAS layout. I will do more of this in part 2 of the video, but how do I do bottoms up? It's simple. One way is I want pullbacks in an uptrend. I will look for stocks above 5 and 500,000 shares. I want them above their 200-day moving average. I'll hit OK, and that cuts my 4,000 stocks. Shows you how strong the market is. And they're all getting filtered for this. And 317, that's a big number. So now what I'm going to do is rank them by the number of up impulses. What are impulses? Impulses are volume, gaps, breakouts, momentum, and 2 trading signals, EMS and CPR. Why do I track them? Because stocks typically have them before they break out and move higher or lower. So if we rank them by this, FATN, Fat Pipe, I don't know anything about this company. It's a relatively cheap company. It had a 50% move on Friday, which is impressive. All my signals fired. I don't know anything about it, so I'm not going to say anything. Too small for me. WTWs, Williams Towers Watson, big cup handle, hasn't broken out yet. Unusual machines, robots. I don't know if they do drones or not. But you could certainly, after a number of failed flags, are we breaking out of a flag there? Good volume with a CPR signal, volume breakout momentum. Now, let me talk about what's on the bottom here. Relative strength versus the spider with the moving average. I want to go long when the stock moves above the moving average or the relative strength, and I want to be short when it moves low. Up here, if it's green, it's above. If it's red, it's below. A positive number is above, a negative number is below. And we could see here that the on-balance volume just turned up today, Friday rather, and the relative strength turned up a week ago. This is an interesting looking stock. I don't think it had much in the way of fundamentals. It doesn't have any earnings. It really doesn't have a lot of revenue. But hey, look at some of the quantum computers. Obviously, it doesn't matter. SBSW, it does to me. Come on. I miss my good internet. I mentioned that gold was strong. You can throw darts at the gold stocks. This is Stillwater, Sibanye Stillwater Limited, recent merger, breaking out after a pullback. Now, some of them have crazy earnings, 200% growth on their last earnings. It's a gold stock for crying out loud. It has a multiple of 5.68. I'm going down the list. EKH, I think that's Endeavor Silver, breaking out to new highs. BVN, it's a minor, pretty damn good looking. Sorry for my French. I didn't mean to hit that one. I'm sure there's other here. AG, Silver, First Majestic Silver. Some of the ones I like the most, AEM. Beautiful uptrend taking off. In fact, really all I had to do is go back into top down and look at, I think it's at basic materials. Click on gold. And let's see, there's probably more. Silver. Ah, I've got my filters on. Cardinal sin, Jeffrey. Got to take those filters off or you won't think there's any stocks. And so AEM looked great. Let's rank them by 2-day force or momentum rather. AEM is one of my favorites. Franklin Nevada Gold, Royal Gold, Goldfields International. I mean, look at these things. They look like Qualcomm did in the dot-com era. Anglo Gold, Ashanti Gold, Newmont. You got to be in gold. I was playing GLD, still am, but I've added to some gold miners. And this was the breakout here. It was so obvious. I called it on one of my midweek videos, buy on the break, and it's really performed well. All right, let's finish up here with just one more thing, and we'll come back with my favorite 5 stocks sometime on Sunday, although it's probably Sunday when you're watching this because I'm on the West Coast. So I'm in that list here, and I'm just going to go very simple. I want price above 5, above 500,000. I want you above the 200 moving average. And I'm looking for 2 days of momentum buy. And let's look real quickly. GNW, Genworth Financials, nice uptrend, pullback, breakout, coming out of a squeeze. Relative strength and OBV have picked up. That looks nice. Let's put the fundies on. And makes money, not a lot of growth the last couple of quarters. All right. SMR, we talked about it already, breaking on the flag. That's one of my favorites. MBI, isn't that the one that you get when you get your mortgage, you pay them a premium for mortgage insurance? Breaking out of a flag, favorite pattern. Intuit, we saw already a little bit further down. I'd rather buy high to go higher. Trinity, Trinity Capital, so not the trains, but breaking out after a pullback here, after a big recovery. FLR, a construction infrastructure play. FLNC, this is pretty here. Fluence Industries, not a big money maker. I don't know I'd have to do some research. I thought it was an energy supplier in S&P Global Commodity Insights Premier List of clean tech companies. All right. Global market leader delivering intelligent energy storage system service and asset optimization software. Energize Ukraine's largest battery-based energy storage prospect. Sounds like they could have a role in data centers. I love it breaking out over the 200. I wouldn't let it get below there. EVTL sounds like a drone company. Edges past Joby Education with stronger financials. So maybe Pioneer Electric Aviation. Joby's the leader. Curie Systems, Curicity Stream. I like the pattern, pullback and breaking out here. I want to learn more about it. Cheap stock. CIA, Citizens Financials, regional banks looked incredibly strong, breaking out here. And then this is an IPO. So if I had to pick, I'd probably be looking at SMR. We'll have more to talk about sometime on Sunday. I'll probably do it late Sunday after my meeting is over. Um, enjoy the run while it goes. It won't last forever. I think we're in the early or in the later innings of this bull. But boy, when you buy right, sometimes it makes everybody look like a genius. Talk to you later in the weekend.